Stocks pause after the recent rally. Metals and IT lead gains while capital goods and power slip. Mid-caps outperform.
A weak quarter and guidance along with governance concerns hurt Aurobindo Pharma, while margin pressure haunts Alkem and fresh litigation over Revlimid casts a shadow on drug makers like Dr. Reddy's and Natco.
A mix of earnings and guidance-fueled rallies in InfoEdge, LIC, MedPlus, Glenmark Pharma and Ircon, while disappointment weighs on Sun TV, Z Entertainment, Astral and BHEL.
RBI Governor Shaktikant Adas says he expects the October Consumer Price Index print to be under 7%, suggesting a cooling of inflation. On defending the rupee, he says India's forex reserves have been built for such rainy days.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Manglam Malu as well as Sonal Bhutra. Well, it is a Monday morning. It's a mixed day for the markets at this point in time. So the mid-cap index is just about holding its head above the water. But we have a lot of earning reactions to concentrate on. So a lot of stock-specific data is really what's on our radar this morning. For example, Dr. Reddy's, which is your top loser on the Nifty, down around 4-odd%. ITC, which has lost a little bit, so that one is down around 2-odd% at this point in time. And the banks not doing too well at this point either. Hindalco managing to claw back, so that stock is up around 5-odd% at this point. Hi guys.
Right. The fact that we're not falling after a big rally is something, I would consider as a positive itself, because you're pausing for breath maybe after the big run that you've seen. The Nifty is just around that flat line. And the other part is that on Friday, we saw the mid-cap index underperform at an index level that is outperforming in today's trading session. And that usually happens when the street believes that, the frontline indices have a firm base in place. For me, the other thing that stands out is the way the metal stocks are coming back. And that's primarily on account of the cool-off that we've seen in the dollar. Tata Steel, for instance, moving closer to the high point of today's trading session. Hi.
Hey Manglam, hey Ekta. And the other thing to watch out for, of course, is the fact that it's the fag end of the earnings season. It's been a long one. Definitely so. So of course, it could be.
I had 18 companies on Friday. I don't know where this
We've lost track, I think, now, how many numbers or companies you're tracking for this result season. But of course, as you said, 18 companies of Friday. A lot of pharma companies in focus, Ekta, on the back of news updates. Their earnings that you spoke about. Tell us more here.
Yes, absolutely. I've completely lost track. It's all blurred, whether it's earnings or other pieces of news with regards to the entire pharmaceutical space. But no, majority is earnings. So, for example, I'll start with Aurobindo Pharma, which is in focus. Now, the company, remember, disappointed in terms of numbers this quarter. And they did hold their conference call this morning at around 8:30 a.m., where they have indicated that the oral solids business has seen a lot of competition, which has really led to price erosion that we saw in the US this quarter. So, it came in at around $331 million in terms of US sales versus estimates of over $380 million. Now, the company has also pushed forward their injectable guidance. So they were expecting $650 to $700 million of sales probably by FY24. Now they're expecting it to probably take place by FY25. Now, interestingly, on the conference call, there were some investor concerns which were brought up with regards to corporate governance. Remember that there is this controversy around Sarath Reddy, who is a part of the promoter group. And there was some investor concerns which came up. So the company did clarify that he was looking after IT and logistics, which will now be reallocated to other responsibilities. He will be a non-executive director going forward. But nonetheless, it seems as though that will probably continue to weigh when it comes to Aurobindo. That is the WPI data. So that has come in at around 8.39%. It is softer than what we were anticipating. So definitely better than what the expectations were. The expectations were that it would be 8.44%. And remember, this is a single-digit WPI data that we've got after at least, at least March of 2021. That's basically the data that we had, that at that point in time, the data had softened to around 7.89%. And now we've got a single-digit WPI figure coming in at around 8.4%. So this compares to a 10.7% in the month of September. Let's see what the internals are, because we do have the CPI data which is out this evening as well, and that is probably expected to soften to a sub 7% figure as well. So that would be important to watch out for, and let's see what the trajectory would be for the WPI data. Remember, we've seen WPI data, or rather data in terms of inflation, soften in the US as well. So maybe there is some amount of input
fuel
cost
and power
inflation.
inflation has been one of the biggest cool-offs that we've seen. From 32% last month, it's come down to around 23%. That's one. And I was just looking at food inflation. Food inflation too has significantly cooled off from about 8% in the previous month to about 6.5%. So together, fuel and food, have been on a declining trend, and that's what actually has taken the WPI lower from double digits for 17, 18 months to now 8.4%.
So very positive, and in fact the food inflation has just about softened to around 6.5% like Mangla mentioned, and that is one piece of data that we will be watching out for in terms of the CPI data this evening as well in terms of a trend. Rupa Nitsure, who's the chief economist at L&T Financial Services, joins in with her thoughts on the WPI data now. Rupa, hi, welcome to the show. What were your estimates, and what is your reading in terms of the WPI data at 8.39%, multi-month low?
Yes. It has come to a single-digit level after a gap of almost 19 months, which is a very long period. My estimate was 8.6% because I was seeing sequential easing in global energy as well as non-energy prices, and statistical base was also favorable. But as you rightly pointed out, the disruption caused by vegetable prices, etc., in the month of September, I think that has also reduced in October. So food inflation, easing of food inflation has also contributed to this benign inflation trend, relatively benign inflation trend for WPI.
Okay, Rupa, what does that, according to you, mean for the CPI data that we're expecting today, and specifically that food inflation number that we are talking about? And what are your estimates for the number this evening that we're expecting?
I'm expecting CPI to cool to 6.88% from 7.41% of the previous month, precisely because I'm expecting, inflation in perishables like fruits and vegetables also to ease relatively, and there also statistical base will become more favorable. We had seen, some spikes in last year in fuel and edible oil prices. So, compared to that, this time the prices are quite low. So that also will contribute greatly to cooling of retail inflation.
So
Okay,
what does all of this, Rupa, mean in terms of the RBI's policy going forward? I mean, how much of that will be dependent on these data points, and how much of that do you think will be dependent on what comes out of the US?
Yeah, that's a very good question. We have seen that, many other central banks besides US Fed, they have also started responding to their own growth inflation dynamics than just responding to the US Fed action. Bank of Canada, for instance, has reduced the pace of monetary tightening. And looking at Indian high-frequency data indicators, we are still seeing a lot of up-downs and flip-flops in high-frequency indicators for consumption. So, and two of the MPC members have already said that India needs to lower the pace of tightening because our demand situation is still fragile, and we should now protect the recovery. So I think for today's WPI print and expected lower print of CPI will certainly influence Reserve Bank of India's decision in the next monetary policy, and there is a high chance that they may reduce the pace of tightening from current tightening rate of 50 bits.
Okay, so what is that sustained trajectory that you expect, maybe, Rupa, from the RBI now?
There is so much uncertainty in global arena, and there are so many risks, downside risks to currency, etc. So making any prediction about the terminal repo rate or the future trajectory of tightening doesn't make sense at this juncture. But point is that RBI will go by the current cross-sectional information, and this is a good opportunity also, I feel, to Reserve Bank of India to revisit the pace of tightening.
Okay,
but the actual, pace of tightening will be influenced by all MPC members, and they need not have consensus on this.
Okay, all right. That point is taken that we can't really predict what the MPC is going to eventually do. But Rupa, do you think that we're out of the woods entirely when it comes to inflation? We've probably seen the worst?
I can't say that because global scenario is so uncertain that saying, taking a definite call on inflation print is very difficult at this stage. But I would say one thing, that in many things, India appears to be relatively insulated, and now the budget will also be a next event. So both monetary policy and fiscal policy together will ensure that growth momentum will be safeguarded, because everybody, appears to be of the opinion that downside risks to growth outweigh upside risks to inflation. So that augurs well for future policy mix.
Okay, all right, Rupa, point taken. Thank you so much for joining us and giving us your take on what the current WPI scenario looks like and what we're expecting from the CPI numbers today as well. Let's do one thing, slip into a short break now. We'll get you more on markets and stock-specific action on the other side of this very short break.
Welcome back. Well, a couple of more stocks which are in focus, and we didn't complete talking about the pharmaceutical space because we had the WPI data to reckon with for the month of October, and you can see that the core inflation has softened quite significantly on a month-on-month basis as well. But I'm watching a couple of stocks such as Natco as well as Dr. Reddy's. And that is because there has been an antitrust lawsuit which has been filed by Walgreens, which is basically a distributor of pharmaceutical drugs in the US for the cancer drug Revlimid generic. It is filed against BMS, which is Bristol Myers Squibb, which is basically the innovator of Revlimid generic, along with Natco, which is one of the first launchers. It, in fact, was the first to file and launch the drug in the US, along with its marketing partner Teva in the US markets. Now, this lawsuit is definitely a potential overhang. Now, the reason for the lawsuit is because they believe that this was basically unfair competition when it came to generic settlements. That's because Bristol Myers Squibb had settled with multiple generic companies for gradual entry for Revlimid generic from 2022 to 2026, and hence there is this litigation saying that, the generic competition wasn't enough or wasn't significant enough. Now, obviously, this is going to be a potential overhang. And what this could do is that there could be suits filed against other companies that have settled with BMS, Bristol Myers Squibb as well, to launch the generic version. And that's probably why you're seeing Dr. Reddy's fall 4%, because they have exclusivity on two strengths as well. So that's the reason why a lot of these stocks are in focus in today's trading session. That's on Revlimid generic in the US.
Okay, all right. So that's all about the pharma space. But the other stock that we're watching out for is InfoEdge. It is buzzing in trade after company posted a good second quarter. Revenues up around 50-odd%. The stock also up 7%. Rima is analyzing those numbers for us. Rima?
Thanks so much for that. So very strong growth numbers coming in from InfoEdge. The top line growth has seen a growth above 50% for the fourth consecutive quarter. In Q2, it was a 51.2% growth. Margins are expanding to about 34.5%, up 440 basis points year on year and higher by 240 basis points on a quarter-on-quarter basis. One of the reasons for the margins improving is the fact that the ad spend as a percentage of revenue has been coming down. In this quarter, it stands at 15.6%. Now, InfoEdge is a combination of multiple business. The key over there is the recruitment business, which comes under the brand name of Naukri. And Naukri revenues have been super strong for the last many quarters. In this quarter, Naukri revenues have gone up by 63%. Their EBITDA margins are above 60%. Apart from that, they also have a real estate online portal called 99 Acres, which helps connect the developers to the consumers, and that also has seen an acceleration in revenue growth this quarter, close to 45% top line growth. They have two other businesses. One is Shiksha, which is into education, and the other one is Jeevan Sathi, which is sort of a matrimony website where they have a market share, a market positioning, which is third right now. But the key driver for InfoEdge for the last many quarters has been the recruitment business, and in that the IT services services revenue growth, IT services hiring, because that's been red hot. But right now, in the interview that we had with the management, they did indicate that IT hiring is seeing signs of moderation, so some acknowledgement that things could slow down on the IT hiring from here on. So the question is, will this result in some slowdown in the recruitment business and therefore the overall business? That remains to be seen. Back to you.
Take that point, Rima. That's about the info edge and IT hiring space. But where we've definitely seen a slowdown are the ad revenues for a lot of the media companies, which is why we've seen a sharp cut in the likes of Sun TV as well as Z Entertainment. In fact, let's talk about Z itself. For a weak set of second quarter numbers, EBITDA margin came in weak on the back of subdued ad revenues. Let's listen into what Rohit Gupta, the CFO of the company, had to say.
We are cautiously optimistic. I mean, H2 has started and October has started well. But then again, that's also because of the onset of the festive season. Really, the underlying demand has to come back, and we are hoping that it should come back. But right now, there are no immediate signs as such. Like I said, I'm hoping that there will be some green shoots that will emerge in the H2, and this will lead to gradual recovery in the overall advertising sentiment across the industry. Overall, like I said, advertising revenues are nowhere near the potential, so we are taking a brunt of that. We have also one key leading channel, Z and Mole, we have taken out of FTA because it has gone into the page honor. And the third is, the movie business. Some of the movies have not performed so well. I think, as the ad revenues come by, because we've taken a very, keeping a very keen eye on the cost, and because of the operating leverage, our margin profile should improve.
Okay, so they are expecting margins to probably improve going forward. But let's talk about one of the top gainers on the Nifty today. This is after its Q2 numbers. Hindalco is in focus. We did speak with Satish Pai, the MD at the company. Let's listen in to what he had to say.
Novelis, by the way, had a very decent Q2 at $506 million EBITDA. And they have said that, they could be facing headwinds of about $75 to $125 a ton in Q3 and Q4. Now, these headwinds are coming from inflationary costs. It's coming from the fact that LME and premiums are down, which is dragging their scrap benefit down. And it's coming from the fact that there are, energy uncertainties in Europe in particular. So it would be fair to say that probably Q3 and Q4 will help us shed some of these negative headwinds that we are seeing. And we still remain committed to our $525 per ton guidance that we give. Single biggest thing that has impacted our cost of production is the availability and price of coal. So I think that, we have started to see post-monsoons, the coal availability and the pricing situation starting to ease. And we are cautiously saying that 2 to 5% reduction in cost of production will be seen in Q3.
All right, that's Hindalco, but time to shift focus to some important opinion coming in from Chairman of Aditya Birla Group, Kumar Mangalam Birla. In an exclusive conversation with CNBC, he talks about the fashion retail space and his views on the online business strategy as well. Listen in.
I also want to talk about your retail arm, fashion retail, that is, because that's getting into the D2C segment, direct-to-customer segment. What are the future plans here?
So it's a very interesting space. My son actually is spearheading that. You have a lot of brands that now don't sell through physical stores. They're selling only
everything has gone online.
And they're doing well. So the idea is to come in as an investor, invest with them and help them grow. There is, I'd say, almost a scientific way of identifying these opportunities, using data, which has become so big. And since we are in the fashion retail space, this is about investing in startups or businesses that are just maybe a couple of years old in that space, which have promise, which have shown that they have customer traction that is borne out by data. And so it's a different segment of the overall business of fashion retail.
So you're focused more on pushing forward the e-commerce side of things as far as fashion retail is concerned?
I think that's going to be an important leg going forward. The physical part of the distribution, remains as important. I think we've come to understand that when you say digital, it actually means in most cases phygital, because you do require a physical presence. In this case, stores across the length and breadth of the country to really make it a holistic business model.
All right, so that's an interesting comment coming in on the retail and fashion business. Kumar Mangla Birla speaks about that vertical, but let's step into a short break. On the other side, we'll bring our commodity segment up for you. Manisha Gupta joins in with Ajay Goyal, who's the director at Shivaji Flour Mills. They'll talk about wheat prices. Stay tuned. Welcome back. As promised, let's bring Manisha in. She's got with her a roundup of all the commodity market action, and today she's focusing on wheat. Atta prices, Manisha?
Oh, well, yes, keep an eye on that, because in winters you start eating more, But the point really being that, this year has been quite a whirlwind when it comes to wheat, because it all started with wheat actually, when you saw those export bans coming in the month of May, and it just percolated to all other agriculture commodities where the government did take a lot of actions on. What I am bringing to you is some good news, because the international markets have seen a 4% decline in a week in case of wheat prices, and the Indian markets also seem to be stabilizing, consolidating, and that is because the latest data from the government shows that the Indian wheat sowing is nearly 10% higher as compared to previous year, and the high prices clearly seem to be making that more possible. Ajay Goyal is director at Shivaji Flour Mills, and he joins us on the show. Ajay, hi. Finally, do you think this 10% increase in Indian sowing as compared to last year seems to be doing the trick now?
So I think currently the market is on a pause mode, because they are awaiting government announcements and scheme of sale under the open market. But this is definitely good news, higher acreage. And but what really affected or impacted the crop this year was the lower yield. So going forward, we'll have to be sure that the yield is good in the coming year. Although everywhere acreage reports are very encouraging.
Clearly. The other thing that the street is really watching out for is the government wheat stocks. And as per the latest numbers that we have, it says 21.04 million tons of a buffer stock is what government has. That whole back and forth on whether or not the government will release wheat in open markets, what are you hearing on that?
So we are all hopeful that the government will release about 3 to 4 million tons, because that's the type of surplus that's estimated will be there by 1st April, after taking into account all their government schemes and the requirements of the government. And that's what the market has come in for a sort of a pause currently, because they are awaiting some sort of government announcement of sale. But if it doesn't come through by this week or the next week, the market could start rallying up again.
So, Ajay, what is the wheat price rise that we have seen until now in this year? We all know the new crop is, 4, 5, 6 months away even now. Until then, with what the open market or the millers or the private stockists have in hand and what the government has in hand, how do you match that availability and the demand?
So, a lot of numbers were floating around on the crop estimate, but definitely it's much lower than what even the market expected, looking at the current supply scenario. And if you were to look at it from a March to now basis, we have rallied almost 30 to 35% as far as local pricing is concerned. Of course, the first rally took place because of exports, but now we have surpassed even that price because during the export times, the prices went up to 25, 26, but now it's like 26, 27. And now we're just hoping that the government does something in terms of release of stocks in the market through FCI or something.
Ajay, looking at both the scenarios, if the government does release, and that's another question on by when do they release, and if they do release, how much of a price correction are you then expecting? If they do not release, then what is happening to the prices?
It will depend, since it will be an auction, and if prices really don't go up in the auction, then you could see the prices stabilizing at these levels or a small 2-3% correction. But if the quantum release is really, really small and a lot of people bid for it, and if the prices in the auction go up, I fear that even the open market prices might rally up.
And what is the kind of demand that you are seeing from the stockists, from the open market, from the FMCG companies as well? Has there been any change at all there? Is the asking price or the bid price changed there too?
So definitely the bid price is keeping in, the market prevailing. So definitely nobody's giving away at discount or nobody's getting away at a discount because, raw material supplies are not assured to anybody. But I think it's now become a totally a spot market. Nobody is really wanting to cover far ahead because the government might release wheat any time in the next 10, 12 days. So keeping that expectation, the markets are currently at a standstill, at a pause.
All right. So clearly the raw material for the FMCGs has gone up by 30-35%, as you said, Ajay. Any news on imports front? Because that is another thing that the street was looking forward to.
No, so there's nothing on the import front, and that's just a mere talk. So there are some rumors going around that India might get some wheat from Russia on rupee payment, and but those are just newspaper reports, nothing concrete as far as we know.
Okay, all right, Manisha, thank you so much. Mr. Goel, thanks a lot for joining us and taking us through your views on that space. We'll do one thing, we'll slip into a short break now. On the other side, we'll connect with Hiranand Savlani of Astral Limited to discuss their Q2 results. Stay tuned. Welcome back. Well, the stock that we are focusing on today is Astral Limited. It is losing in trade today, though it has recovered sharply from the lows. Earnings in Q2 were weak as expected because of weakness in both their plumbing business and adhesives and paints business as well. Let's get in Mr. Hiranand Savlani, who's the CFO at the company, joining us now to discuss what happened in Q2 and most importantly, what is the outlook for the rest of the year. Mr. Savlani, good afternoon. Thanks a lot for joining us. I wanted to speak to you specifically about your pipes business because we did see Q2 seeing a lot of inventory losses across the industry as well. For you this time around, there was an impact on EBITDA because of that. How are PVC prices right now? Have you seen an uptick on that? And do you expect the worst for PVC pricing is over?
I think PVC prices fall sharply in the last quarter, particularly in Q2 only. You will see that 32 rupees kg drop was that. So because of that, the entire industry suffered the inventory losses. And after that, Q2 also some correction has taken place. So now it looks like that sooner or later that will be the pause. And then from here on, slightly uptick will be there. Maybe another 3-4 rupee drop can happen. It is very difficult to predict the commodity. But now it looks that now sooner or later, bottom is going to form out. And from here on, the upward journey will start. Across the industry, the performance was weak. But in spite of that, if you see many companies have declared quarterly losses. All are the listed companies. Compared to that, Astral was much better. We have delivered at least 13% EBITDA margin. So that is the commendable things I think our team has done. But otherwise, the industry situation was weak, very weak. But now I think improvement has already started, and Q2 onward or Q3 onward, it looks that now from here on, the volume growth will start picking up very fast.
What can you guide for in terms of margins for your plumbing business? Because I'm looking at some, commentary that has come in from your conference call. You said that pipe business will continue to witness some margin pressure in the third quarter, while your other businesses will see margins towards mid-teens. Can you give us a sense of, on a blended basis, what are we looking at towards the end of this year?
So I think we have to see how the polymer is behaving from here on. If it is going to take a pause, then I think on a blended basis, we can deliver easily 15% kind of margin. But till this fall is going on, it is very difficult to predict that part of it. But it looks like that now it will settle down. And from here on, the margin will also be in a better position. Particularly our other businesses, adhesive, paint and all these things where the raw materials have started correcting very sharply. And there we have already taken the price rise. So there the pass-through takes place with the lag. So because of that, some uptick benefit will be there into that businesses. Pipe normally, whenever the polymer price fall, we have to pass through to the market immediately. But in other businesses, it is not like that. So some benefit will be there. So on a blended basis, we are of the view that 15% should not be a big challenge for us in the full year basis.
Okay. So what is the plan on the paint side? Because you are operating via gem paints, you did have plans in terms of expansion. Where do things stand? How aggressive do you want to be in this space? Simply because of the kind of competition that we're seeing from newer, bigger, large pocketed companies, as well as older hands which are very well established in this space.
This year we will continue with the existing management because that is what their commitment to deliver certain number for the current year. So we are not taking the front role into that company. But all this other division we already started taking entries, and we are monitoring that things. And from next year onward, we are going to launch with the Astral brand. And from there onward, we can see the growth will start. Until this year, whatever the growth they will deliver, we will accept it because the valuation is based on the current year's multiples, so FY23 multiples. So we have given the driving seat to them, and then we will see that how Astral team is going to shape up this thing. But once this brand Astral will launch and the business will open in the other state, right now they are focusing only on the south business. We are going to open in the other states also over a period of time, and then we will see how fast we can take this business. Right now the top line is around 225 crore rupees, but we are having a sizable capacity ready with us which can take this business is to close to about 1000 crore kind of top line. So we are ready with the capacity. So next year onward, we'll see how best way we can span out this product into the other geographies and we can grow at a faster run rate.
Okay, so 1000 crore rupees is what you're expecting in the paints business. I wanted to speak to you about your sanitary ware and faucetware business because that's a newer segment for you. You added 34 showrooms in Q2. What is the expectation in the second half? And will you be putting in more capex in this particular segment? And the opportunity size, can you quantify that for us as well?
So I think you rightly said that we already completed 34 showrooms. 97 showrooms are under construction, and we are targeting that 500 showrooms should be ready by March. So which is a very aggressive target, but we are confident that we will be able to complete 500 showrooms by March. And all capex is done by our dealers and distributors. Company is not going to spend money on this capex side. So it is done by our existing dealer and the new dealers, which we are appointing this thing. Right. And the opportunity in this industry is around 16 to 17,000 crore opportunity there. And we are expecting that the way brand Astral is spread out across the country and the way confidence which we are seeing from the dealers and distributors. Otherwise, this 500 showroom is not a small target. So I think they are overconfident, our channel partner, and we will be delivering good number in the next year onward, because this year major time will go to the construction of the new stores and revenue will start from the next year onward. Some revenue will come in Q4 also.
Right, Mr. Savlani, just a couple of numbers if you could give us, or some more details. You said that paints and adhesives from currently 220 can go all the way up to 1000 crores. Just wanted to understand what is the timeline for this target for you. Secondly, you are constantly entering businesses where there are large established players, notwithstanding the opportunity that there is, 16 to 17,000 crore in the bathware opportunity. But how much are you targeting to come from it? And will all of this come at the cost of margins? Because you are making inroads into businesses where there are established, strong players already, bathware included?
So like any new business is when you take the entry, initially you have to take some hit on your existing business, because existing business only contribute to the new businesses. But once this business will start delivering revenue to you, then you will see that will be a top line growth as well as the margin growth also. So we are also thinking in the similar line that when we took the entry into the adhesive business in 2014, that time the top line was hardly 200 to 225 crore. Today we are a 1000 crore company. Last year we have completed more than 1000 crore. So in initial 1 or 2 year will be little dent to our overall margin. But ultimately once this business will start contributing to you, then you will get the growth as well as the margin. So here also we are expecting that similar will be there. You have to understand the strength of a brand, because brand Astral is a very, very strong brand across all the geography. It is not restricted to only particular area. So now it is the time that we should encase that brand. We have spent more than 1000 crore rupees to build this brand. So now we are encasing that brand. That's why we are going into the allied businesses where our channel partners are already there. Whether it is you can say pipe related to sanitary ware and faucet, paint related to our adhesive business. Now adhesive business, we are already having 150,000 dealers with us. So all these things are extension of our existing dealers and distribution network. That's why we are entering into new business. Initially, yes, some pressure will be there on the margin, which you can see in the numbers also. Absolutely. In this current number also, sizable spend has been taken place into sanitary ware and faucet also. That's why little margins are low. But 1 or 2 years down the line, I'm sure and we are confident that this businesses will start giving us a good number. And at that point of time, you will see that we are going to deliver growth and margins both.
All right, so that point is taken. We'll hold you on that. Thanks very much for joining in and speaking with us. So yes, their margins have been crunched all the way down to around 13 to 14% for Astral. So that stock is down around 3.3%, been quite volatile in terms of a performance in today's trading session. That's the management. We'll take a short break. On the other side, we'll focus on MedPlus, Sun TV, LIC, the list can go on. A couple of these stocks in focus on account of their Q2 performance. Stay tuned. Welcome back. Well, let's focus on a couple of more pharmaceutical / healthcare companies which are in focus on account of their Q2 numbers. I'm also watching MedPlus. With that stock is up in double digits at this point in time. It did come out with its numbers during market hours on Friday, but nonetheless, it's probably the conference call takeaways and the overall optimism from brokerages which is really helping the stock in today's trade. So, for example, a couple of important points from the management include that there was a net addition of 348 stores in Q2. Separately, this is around 1.5 times its usual run rate. Now, the store addition was focused on non-metros as per the company, and they are also exploring possibilities of entering into 3 new states. Now, MedPlus separately is also participating in the Axis Rising Stars conference, which is taking place today, and hence maybe there is this added momentum on that. Overall, brokerages are positive. So Credit Suisse has upgraded the stock to outperform from neutral. They have a target price of 750 odd rupees. The company, they say, is benefiting from a maturing store network. The company is benefiting from maintaining its current level of discounting as well. And they're benefiting from an increase in the share of private labels as a whole. There's a reduction in the FY23 estimated EPS and target, which is due to higher losses possibly in diagnostics. And the key risks, according to them, include rise in discounting, trade margin cap on private labels. Nomura is positive as well. They've reaffirmed their buy. They have a target price of 928 rupees on the stock. And they've raised their revenue estimates for MedPlus by 3 odd percent for FY23, 1.2% for FY24. And is about 1% for FY25. So positive from the brokerages.
Okay, so good going for MedPlus, but that is something we cannot say for Sun TV because it has lost over 8% in its market capitalization today after a weak set of Q2 numbers. Vahishta is joining us to tell us what went wrong this time around. Vahishta?
Hi Sonal, thanks for that. Where there is some bit of selling pressure in Sun TV today and the results were out over the weekend. The revenues have declined 3% and has come in at approximately 800 crores. The street was expecting upwards of 900 crores, so there's a miss on that front. The growth was dragged due to weak advertising revenue which the company has faced, and this has even been mentioned by Z, whose results were also out on Friday post-market. The advertising environment as a whole has been weak, and the second half of FY23 is also expected to be on the subdued side. The Sun TV's margins, though, are stable at 65.1% in this quarter. The company had declared a dividend of 3.75 rupees per share. Now, in terms of brokerages, UBS has a buy rating on the stock with a target price of 600.
All right, Vishta, thanks a lot for that. So that's about Sun TV. The stock actually currently at the low point of today's trading session. But the other stock on our radar is LIC. It's doing well on the back of their strong second quarter earnings. Surabhi joins in with the earnings fine print on that one. Surabhi, what is it that the street like? The stock is up 6%.
LIC has posted a really strong growth in their premium, in their net premium and in the value of new business. Their net premium has grown by 26% on a year-on-year basis, and their solvency has also improved on a year-on-year basis, now standing at 1.88. Their PAT has inflated 10 times, but this is just because of changes in the accounting policies regarding the investment income. The annualized premium equivalent, the APE, has grown by over 45% sequentially, and the value of new business has grown by 63% sequentially, leading to a 160 basis points of VNB margin expansion, and now is at 15.2%. The VNB margins were driven by better margins on the group business. Their embedded value has seen just a growth of 1% on a year-on-year basis, which is a point of a concern. Overall, really good numbers from LIC, but only the slower growth of the embedded value is a little bit of a worry.
All right, we take that point, Surabhi. Thanks a lot for that. With that, we'll take a short break. On the other side, we get you more on the markets and individual stocks. Welcome back. As always, let's get you a check on what's taking place in the F&O arena at midday. Interesting things happening because, just moments ago, we had the Nifty futures actually underperforming the cash. And now as we speak, the Nifty spot is down almost 23 points. While the futures is actually higher by about 0.14%. And that means that the futures premium of around 74 points still stays. And that's at the higher level that we've seen. So this is something that we need to monitor. However, what's also taking place is that there is a fair amount of writing at the 18,400 call and the 18,300 put. 18,400 call has a premium of almost 70 odd points. So bears believe that 18,450 to 18,500 would be where they would see some sort of congestion, or maybe, we would see some resistance there. But at the lower levels, 18,250 to 18,200 could see a fair amount of support. That's what the 18,300 put is indicating. But remember, usually when the market's around an important mark like 18,300 right now, people write straddles, which is a call and a put together. Combined premium at the 18,300 straddle is 200 rupees. So that means for the options that expire this Thursday, the smart money is positioning itself for an 18,100 to 18,500 range for this week's expiry. And if they turn out to be right, then maybe we'll have to wait just a little longer before we hit that all-time high of 18,604.
Okay, all right. So that is the F&O setup. Of course, Bharat Forge's numbers on the bottom of your screen. We'll get Sonia in to analyze those for you. But for now, it's a wrap on this edition of HTR, that is Halftime Report. Before we wrap the show today, it's a quick reminder that Ramesh Damani is back with us today on the Wizards of the Street show. Catch the market veteran's journey and inspiration behind his success in our special at 3:30 p.m. only on CNBC-TV18.